Welcome to ConnectWise Manage Implementation Training. In today's session, we're going to review agreements. In the previous session, we reviewed foundation and core setup, and now it's time to start focusing on your agreement setups.
Hi, I'm Stephanie Jameson, a business consultant at ConnectWise, and I will be your guide for your implementation training.
In this presentation, we will cover the process and then an overview with both the whys and the hows of agreements in ConnectWise Manage. We'll cover business decisions you will make to help you prepare to set up your agreements. And then we'll discuss the process to successfully set up first agreement types and then the live agreement. Plus, we will review the agreement screen and invoicing. We'll show you demonstrations throughout. Agreements are found in the finance module. In the ConnectWise Manage lifecycle, agreements can touch everything from marketing to business review. And to you, agreements may be an entirely new way to look at how you sell and bill your services for recurring revenue on a regular basis. Agreement process and overview. First, let's review why use agreements. Agreements can offer you a source of recurring revenue and information to help plan staffing needs. Agreements can offer your customers an assurance of your coverage at a planned regular allocation, which is easy on cash flow. Agreements will protect both of you with a clear distinction about what services will be covered. The three basic kinds of agreements are block time agreements to cover a specific number of hours that you service your customer over a specific time frame. Managed service agreements, which cover devices and equipment through your remote monitoring and management solution like Automate. This typically ties additions for the devices that you are monitoring to the agreement. And user-centric agreements, one of the newest and most popular options that integrates with your customer's Active Directory, so you charge based on the number of users that you are supporting. You can mix and match what you cover on one agreement. In this example, our customer, Easy Printing, has 4 agreements listed on their company page Agreements tab. Each has a general type and a specific name. Also, each is tied to a location and a department. But if you notice, there is only one location and 2 departments. I will explain later what these options mean and why use them. Because agreements can provide you with a steady income stream, it's important to sell them. Let's look at some options for selling and negotiating agreements with your customers. You can have a standard offering and upgrade to the premium level. The premium upgrade gives the customer the opportunity for a higher number of covered services at a higher price. A premium SLA upgrade sells the customer a faster response time on tickets. Carryovers and overruns give the customer assurances about being able to use all the time that you are selling them. Set up work type and work role exclusions so you can cover services without giving away valuable after-hours time. Instead, sell that time as an upgrade. You can set up an amount-based agreement to cover expenses and products. Then, as a bonus to your customers, you can send them a $0 invoice to show the work that was covered. Finally, the one-time block agreement can be a basic starter package for customers. For example, residential customers who are learning to transition to agreements. Here is an issue Phil, the service manager, is experiencing. He has been offering services where the customer simply buys services when they need something fixed, which offers only sporadic income. He says, I want to move to agreements, but how much should I charge? What about my demanding customers who want all my time? How do I keep them from abusing the system? Today, we will look at options that will help Phil and you protect your organization from demanding customers that might want to use up all your time. Let's look at what you need to do to transition to agreements. Start by creating a service history report for each customer to see the amount of time they consume regularly. The company time billing report can show you this. Then divide the number of hours by the week, month, or quarter, and build an appropriate cost and invoice amount for that time frame. If your rates fluctuate by season, then instead of a flat rate, consider offering only a discount during the high season. For example, 25% off work done during those months.
Let's look at what you can do to help your clients transition to agreements. Review their service history with them. Show them how spikes of service requirements cause them unexpected cash flow issues. Explain how agreements serve as an assurance for coverage and distributed cash flow.
And if they are still hesitant to move to an agreement, offer a specific number of hours as a one-time block agreement to ease them into it, like 100 hours of coverage for one price that they pay for monthly. ConnectWise Manage allows you to set restrictions to define what the agreement can cover and what it will not cover. For example, there is an option to only cover services running through one department, one service board, or one location. This is also helpful for your general ledger integration. When you're mapping agreement revenue to your accounting package, you can transfer the agreement invoice to your accounting package by department as an option. Then you can use those departments as profit centers. For example, help desk or managed services. Dating the agreement is a part of your agreement restriction options. For example, you can backdate the starting date of an agreement if you're transitioning from another system. You can choose your invoice date on the agreement to be different from your start date to meet the customer's needs or for billing prior to service month. And if you do not specify an ending date, the contract and the invoicing will continue until the customer proactively asks to stop it. Let's look at agreement types you might consider using. Block time agreement, which we already discussed. The block of time can be hours that your customer uses per week, per month, or per quarter, such as 10 hours per month. Or the customer can buy one chunk of time, such as 100 hours, for a one-time agreement, which is useful for an install, for example. A managed services agreement defines monitored devices and networks, so you can charge for your RMM support. Hosting agreements are based on cloud services, email seats, web service, or applications. A professional services agreement provides special rates for specific customers. Other agreement types include equipment rental, which can be useful during a business surge or disaster. Maintenance or hardware and software, both on-premises and cloud. And software assurance for installation, protection, and training. Remember our easy printing example with 4 agreements? You can provide customers with a premium level of service by combining multiple agreement types. To start the agreement process, first define agreement types in the setup tables. Your database has sample agreement types to help define different services, and you can import more from the ConnectWise Managed Marketplace. In this example, we have block time, email hosting, equipment rental, and levels of managed service. Agreement types are like templates where you can define common settings, so when you attach it to a customer, you will have fewer fields to customize. To create a new type, click the new item icon. While setting up the agreement type, you have multiple options to consider, including defaults, parameters, and exclusions. It's a good practice to plan out what you will choose with your sales and service teams prior to setup. We will discuss these options in more detail later in this session. Once you have set up your agreement types, it's time to plan for the new agreements. Feel free to discuss these decisions with your implementation consultant, who can guide you through the steps to create a new agreement. Before assigning each agreement to each customer, you might want to work with your team to create a matrix-like spreadsheet listing each customer and the agreement type, name, and broad categories. And remember to check out the marketplace for agreements you can import, tweak, and start using right away. Next, it is time to create a live agreement for the customer. While you can start in agreements, it's easier to start in the customer company screen so that the company information auto-populates. When you select an agreement type, the default settings you selected for that type will also populate. Then make your changes for that specific customer. This is where your matrix can come in handy. The agreement search screen gives you an easy access to see all the agreements for your customers once you have them all set up. Notice that Acme Attorneys has multiple agreements. Click an agreement name to see more details. Agreement invoicing has its own tab in the invoicing screen. Often, partners invoice for an agreement prior to the service dates, guaranteeing revenue for the following month. And when it's time to send the agreement invoices, ConnectWise Manage provides you with standard agreement invoice templates that will show service details to your customer. In this example, we have a user-based agreement for 20 supported users at $175 per user. The next line item shows each user's name so the customer can see what they are paying for, so they can see the value of the agreement. Once you set up your agreements and start using them, the financial dashboard will track what it's costing you. Use this to analyze and manage your agreements. you can see a breakdown that compares which agreement types are producing a higher effective rate and which are costing us more. You can determine the agreement's cost effectiveness by comparing the effective rate with the average hourly cost to see if the agreement is making more money than the actual cost of the effort. In addition to the financial dashboard, be sure to check out other agreement reports, such as Gross Profit Report and Reconciliation Report. See ConnectWise University documentation for more information. Agreement type options and decisions. We start by setting up the agreement types under System, Setup Tables, Agreement Type. Click the new item icon to create a new agreement type. You can add more at any time. You have a lot of choices to make, and the more information you enter here, the less you have to enter when you create the live agreement for each customer. It's a good practice to plan out what you will choose with your sales and service teams prior to setup. Let's look at the agreement defaults, application parameters, recurring invoicing parameters, and defaults section in more detail about the options you have and the decisions to make. Before you can make any other changes in a new agreement type, under description, you must give it a name. Because agreement types are used as templates for when it's time to connect them to a specific customer, we suggest using a naming convention so it's easy to understand what the agreement type is and to find it again quickly. Remember, many customers can have one agreement type, like Managed Service Silver, and one customer can have many agreement types, such as Cloud Service, On-Site Support, and Internet Support. You can choose to make an agreement type the default. All customer tickets will automatically be connected to this default agreement until you set up other options. Under the Agreement Default section, you can define a location and/or department. This setting is not only helpful for geo-mapping, but it is also helpful to restrict an agreement to only being able to cover services in that location and/or department. Service level agreements are promises you offer to customers regarding how quickly you will respond to their issues. This is where you set the SLA on the agreement type. First, you will need to define these targets in the SLA setup table. This tracking is optional and does not need to be set up in order for an agreement to work properly. If you are ready to move forward with SLAs, here is what a setup can look like. Now we're back in the agreement type setup table, moving to the application parameters section. This helps protect us against over-delivering or giving away expensive after-hours time. First, we'll look at application units. This is where you can define what is covered by the agreement, hours or currency known as amount. These application units tell the system what will be covered on a ticket when the agreement is attached. Will your agreement cover billable products and billable expenses? If so, then use an amount-based agreement to deduct the dollar value of the entry. An hours-based agreement is best when deducting a unit of time. Less common is the option to choose a number of incidents. Let's look at this in more detail. When you have an amount-based application unit, you can deduct the dollar value of the time entry from the allocation. When you have an hours-based agreement, you deduct a unit of time from that allocation. If you use various work roles and work types, you may want to deduct the amount. $300 may sound like a lot, but if it's on site, it may not. Because work roles and work types are critical to your setup, we will show you more about this later. Once you choose the application units, you can also choose any limits or unlimited and available per time period or one time. Here, we chose an amount-based allocation to sell time. The result is that only time is checked under agreement covers. For more protection against undercharging, you can click the exclusions link. This pop-up opens to define which work roles and work types will not be covered. For example, the customer only wants to pay for help desk support during regular hours. Moving all work roles except help desk to the not covered side and moving all work types except regular to the not covered side will tell the agreement to only cover help desk support during regular hours. Carryovers and overruns are like rollover minutes. You can set up the agreement to assure the customer that they carry over time if they don't use it all in the allocated period. The overrun option will allow them to dip into the upcoming period and borrow from their allocation if needed. Carryovers and overruns are an excellent way to offer more value when negotiating the sale of the agreement. And for your protection, you can set the carryovers, for example, to expire after 30 days. Here's how it works. The first ticket that applies to the agreement will draw from the carryover hours before it pulls from the current cycle's allocation. For overruns, be sure to set a limit. This limit is set to 50% in our example. That means that the customer can draw from the future, but only half of the next cycle's allocation. For more protection for you, you can choose to have the agreement expire when their available allotment is 0. This is effective on a one-time agreement. All tickets at that point get billed at your default rate. Now we move to the recurring invoicing parameters section. You can choose the billing cycle that makes sense for your company. For example, this agreement type will be invoiced monthly based on the contract year for $5,000 a month. Monthly, quarterly, and annual are the most popular for open-ended agreements, and you can choose calendar or contract year. On this invoice example, we bill monthly based on contract year. We currently have no unbilled overages. If the customer used more than their 10 hours this month, it would show up under the overages. Then overages will appear in your invoice wizard so you can bill the customer on the standard invoice for what the agreement did not cover. Remember, the application parameters define how the agreement covers items when the agreement is attached to a ticket and the duration the customer has to use their allotment. The recurring invoicing parameters define how often you send a bill for those agreed upon rates and the duration between invoices. Now we move to the default section. This field is the invoice template for the agreement invoice. These fields allow you to define if you want to force every time, expense, and product entry to be billable against the agreement. Keep in mind that the agreement can only cover what it was originally set up to cover. If you want the individual entry to drive whether or not it's billable, set these fields to no default. The Invoice Customer checkbox provides on the standard invoice a list of the work that was covered by the agreement for the customer to see. The location default options allow us to tell this agreement to automatically attach to tickets that are open for the customer. This is useful when tickets come in for a customer. You don't have to decide if it is a contract customer with an agreement. By selecting a location, ConnectWise Manage will automatically attach the agreement. You can define the location with or without the department and board. In this example, the system will attach the agreement to any ticket from the Tampa location, no matter what board the ticket is created on. Once you have made all your decisions and set up the agreement type how you want, hit Save and Close, and now it will be available when creating the specific customer agreement. Most partners that set these up have about 5 different agreement types. Agreement Type Setup Demonstration. I click on the System module and navigate to the Setup tables. I right-click to open the screen in a new tab so I can work quickly between multiple screens. In the Category drop-down, I look for the Agreements category and click Search. I select the Agreement Type Setup table. This is a list of the agreement templates on my system. As a new partner, you may only see 1 or 2 agreement types. Just click the plus sign to create a new one. The agreement types are settings of common defaults. For example, the outsourced virtual IT agreement type shows common defaults for various fields such as the descriptions of the agreement type, the location, and the department. Here's the application parameters section, the recurring invoicing parameters section, and scrolling down, I can change the defaults and create a new record default. When I'm done creating the new agreement type, I click Save and Close and return to the list view. Also, within the System module is the Marketplace where you can import agreement types for free. The Partner Exchange portion of the Marketplace is where we have templates to download, modify as needed, and use right away. I click on the agreements to filter the view. To see customization options for the agreement type, I click the Import button. Please note, this Import button is only visible when you access the Marketplace from ConnectWise Manage and not a URL. I click Import for the Managed Services Agreement, and the Import Wizard opens where I select my default location, department, and monthly billing cycle. The red asterisk tells me these are required fields. I click OK, and the agreement type has been imported successfully. To open it, I return to the Setup Tables tab, click Search to refresh the screen, and I see the Managed Services Agreement type that I just imported.
Pause and try it.
Now that we have reviewed how to set up the agreement type, it's time to review options and decisions for a customer live agreement. There are several ways to create a new agreement. One option is in Finance Module, Agreements. In the Agreement Maintenance screen, click the plus sign to create a new agreement for a customer. Remember, if you create it from the customer screen, much of the information will pre-populate. However, we will review options and decisions for the new live agreement from the Agreement Maintenance screen. Each section is a pod. Here we see the agreement pod. First, choose the agreement type from the drop-down. If you set up a type as a default, it will appear automatically. In this example, email hosting is selected, so several options will populate from the agreement type in the setup table. Then, give the agreement a descriptive and useful name. Use your naming convention. For example, if your organization is called ABC Technology, you might have ABC Tech Monthly 10-Hour Block. In that case, it would be the same name for all the customers you associate it with. Or you could name the agreement with the customer's name, such as Buster Attorneys Managed Service Bronze. In that case, the agreement has specifications just for that customer. Naming conventions are important, so please take time to decide how you will call your agreement names for the customers. In the Company pod, select the company from the drop-down. If you create an agreement from the company screen, all the company details will auto-populate. The application parameters may look familiar to you. We saw it in the agreement types to set up the default application units of hours or amount and the available per. When we set it here in the agreement, it is unique to the customer and the specific agreement. This is where you can set carryovers and overruns on a per customer basis as well. Internal notes are non-customer facing entries that allow you and your organization's users to identify the scope of the agreement. This section will populate based on defaults that were already set up on the agreement type in the setup tables. In the Recurring Invoicing Parameters pod, you can set the billing cycle, dates, and amount for the individual customer's invoices. If you set these in the agreement type, these fields will be auto-populated. Can you see that setting up these in the agreement type can save you time when setting up each live agreement, provided each customer has the same billing cycle and amount? In the Invoicing Parameters pod, you can check time, expenses, and products if you want to show your customers on the standard invoice the work that you did that was covered by the agreement. Click Save and more tabs now become available. There are 7 additions associated with this agreement. As you may recall, an addition covers additional charges over and above the basic agreement. These additions include 10 managed workstations, 10 managed mobile phones, a product, and 100 hours of block time one time at $75 per hour. Notice, we have the option of prorating price if this sale occurs in the middle of a billing cycle. The Work Types tab is where you can define custom rates for this customer's agreement. For example, if a customer purchased time for business hours only, we can offer them a discount on after-hours rates because they bought the agreement. You can also define custom rates on the Work Roles tab. For example, we may have a customer that gets a 10% discount on all work roles, such as technician and engineer. The Agreement Service tab displays all service tickets associated with the agreement. This agreement currently has 2 tickets, a closed ticket for 4 hours and an open ticket with no hours yet. The Agreement Time tab displays all the time entries associated with the agreement. This agreement currently has 3 time entries from Andy Bell, 2 as systems engineer and 1 as office admin. Notice, the app hours column shows exactly how much time applied to the agreement. When there are agreement limits or exclusions, the app hours column may not always match the bill hours. Customer Agreement Setup Demonstration. I will create a live customer agreement based on an agreement type. In the Finance module, I open the Agreement List View screen. These are agreements that I have already made. To create a customer agreement, I click the New Item plus sign from this screen. First, I choose the agreement type that will serve as my template. Then I select a company, but this is just one option. Often, a faster way to create a live agreement is on the company record in the Companies module. Let's review that option. I open companies in a new tab, click search, and can see the companies that are in my system. I select Easy Printing and Copying. They just purchased our Managed Services Agreement. From their company screen, I go to the Agreements tab and click the new item plus sign to create a new agreement. In this screen, the company information preloads, saving you time. I select the appropriate agreement type. Then, I complete the required fields, starting with the agreement name to make this agreement for this specific customer. Keep in mind that the agreement name appears on the customer's invoice, so you will want to make it recognizable to them. It could be named for my company or for their company. This is where you use your naming convention or rules to help identify and define your product. I select the start date to be the beginning of the month. I select no ending date. I verify the billing start date is correct. I click Save and see the tabs now populate at the top. I go to the Additions tab to add service offerings that Easy Printing has agreed to. Under Product ID, I choose a service, which is an agreement class product in ConnectWise Manage. To see where they are stored, I go to the Procurement module and choose Products. I filter by agreement in the class column. Here are the various service offerings that I can load into my customer's agreement, such as Internet services, email, and managed services like Managed Data Backup. Back in our Agreement Additions tab, I search Managed and select Managed Data Backup. I enter the quantity of 1 unit, the description which details what services are offered, my effective date which will match the billing start date. I save and close, and the service offering is now listed. I enter more additions. If you have an RMM integration like Automate, it will update the quantity on the devices for you. I manually enter the price, but when you build your product database and manage, you can define your service product prices, descriptions, and quantity based on per user, per device, or block of time. Then the price will default to what is listed in your product database. I now have a Managed Services Agreement with 3 service offerings. On the Main Agreement tab, we can see that this agreement is ready to invoice for the April coverage period.
Pause and try it.
Let's move to invoicing. Under Finance, Invoicing is the Agreement Invoicing tab. It will allow us to see all agreements that are available to invoice. These invoices represent your recurring revenue in ConnectWise Manage. This is the contracted billing amount that is loaded into the customer's agreement and is separate from any work based on a service ticket or a project. The through date shows us through which period we will see agreement invoices. When ready to create agreement invoices, check the box on the left and click the button to create invoices. The pop-up asks, "Are you sure?" This means you are ready to continue. Click Yes. And you will see that the invoice number has been created. Click into it to see the invoice details. We see the billing information pod and the invoicing pod. Click the print button to print to PDF for preview. You can review the agreement invoice before you send. Agreement invoicing demonstration. Now that I've created the agreement, I can prepare the invoice for the customer. In the Finance module, I open the invoicing screen. Here is the Agreement Invoicing tab. The through date at the top determines what appears on the lower half of the screen. I search for Easy Printing and Copying. I check to select it for invoicing. This agreement covers the customer for April, but I would like to invoice before the coverage period. So I change my agreement invoice date to March 1st to match their standard invoice date. I click Create Invoices and select Yes, I am ready to continue. Here is the agreement summary with the invoice number, which I click to review this agreement invoice. Here is the invoice pod. Billing Information pod shows the company information. Here are our calculations. To preview what the customer will see when we email it, I click the Invoice Print to PDF button. The invoice lists all the agreement service offerings. The invoice date is March 1st with net 30-day terms, showing the customer that this invoice is due on March 31st for the monthly billing of April. Remember, the invoice date influences the due date.
Here are all of the managed service offerings, the quantities, the descriptions of each offering based on the product description, and the total at the bottom. Before we start adding time to the agreement, I will review the agreement setup to confirm that it's ready to apply to services. I start at the Companies tab where we set up the agreement. In the application parameters, I see that this agreement will cover an unlimited amount of hours when the agreement is attached to the ticket. I scroll down and look at the covered work roles and work types. Currently, all work types are set up to be covered by this agreement. However, this customer's agreement does not include after-hours work. So I move after hours to the work types not covered area so that after-hours work will be billed separately. Under Defaults for New Records, I add a location so that when tickets are created for this customer in the Tampa office, this agreement will automatically attach to each new service ticket. I check Default and Save. I review the invoicing pod to confirm that any entries on the agreement will also be listed without a price on the standard invoice. This will show our customer how time applies to the agreement. I save and close. Because I have 3 agreements for easy printing, I want to confirm that the other agreements are not set as the new record default. Only one agreement can be the default. This is not a default agreement. And this is not a default agreement. I don't have any conflicts, and this managed services agreement will default on the ticket. Now we can start creating tickets for the company that will be applied to the agreement. Let's look at next steps so you can successfully transition to agreements. Start by reviewing the service history of your loyal customers to see the amount of time they consume regularly. Then divide the number of hours by the week, month, or quarter and build appropriate rates and discounts. Set up the agreement types in your system. Then you are ready to start selling the agreements and additions like monitoring services, cloud services, and user-based billing profiles. Agreement, service ticket, and time. Demonstration. Now I will create a ticket for easy printing and copying and apply it to their agreement. I could go to the Quick Add plus sign to create a ticket, or I could stay within the company record. I could go to their Service tab and click the New Item plus sign to create a ticket. The advantage of creating it here is the company is added by default. I can see their Managed Services Agreement attached to the ticket. I enter a summary for the issue, network issue, and save the ticket. Let's say I am the technician working the ticket and I am adding time from my calendar. This creates a new time entry. I see my charge to for the ticket, the networking issue, my default work role, and my default work type. For this example, I'm going to enter my regular work for a half an hour of time. But then I continue working on it after hours to complete the network testing. I enter my notes to show that I completed the after hours testing. I close this ticket and save and close my time entry. Now I'm done with the service ticket and ready to proceed with invoicing. I go to the invoicing screen and stay on the invoicing tab to review the standard invoicing. This is different from the agreement invoicing because we're going to see billable records that are on tickets, projects, and sales orders. I click Search here to see records that are available to be invoiced as of the through date. I filter this view for easy printing to find the service ticket we just created. Here is the line item representing our service ticket. I click into the company to see the records that are available. On the Actions drop-down, I select Create Invoices to see a quick recap of the total hours that are available to be invoiced. Here is the total time. The agreement covered half an hour worth of time. The net amount of the invoice includes a bill for the after-hours time that was not applied to the agreement. I click Continue to create the standard invoice. Here is our billing information, company information in the billing section, and calculations. I click Invoice to create the Print to PDF preview. The invoice shows the half-hour time entry with a zero charge because that time entry was covered by the agreement. And in the Adjustment section, the half hour is not included in the invoice total, but instead is subtracted from the block of time the agreement covers. Let's look at the Agreement in the Time tab to see how it displays. In the Company screen, I click the Agreement tab and review their Managed Services Agreement. At the Time tab, I see all time entries where the agreement is attached. Here is the regular time of a half hour of billed hours and 2 hours of after hours time. The App Hours column shows the time that was applied to the agreement. Bill hours of 2 hours, and none of those hours apply to the agreement because after hours is out of scope. To understand why something might not apply to the agreement, click the information icon and it will show you that the work type was not covered, and that's why that time cannot apply to the agreement. Thank you for viewing this implementation training. For more information, please refer to connectwise.com/university, or you can discuss with your business consultant.